there's no other. That is indebtedness percent. So you can comment on the particular piece of the paper after the all the four presentations are over. So may I request Vinod Nair to kindly make a discussion analysis on the market and investment opportunities in the budget.
Sure, sir. Thank you so much, sir. Firstly, let's thank Vicky to inviting me here. Good evening to everyone. Before saying how the budget was, let us try to assess what the market was having some expectations, maybe let us do a preview about this. What was the market having an expectations towards this budget? So firstly, I like to say that this time especially the expectations for this budget was very low. When I say this, the main reason is because over the especially last 1 to 2 years, lot of reforms has been already taken by the government. For example, you may have seen that last year, we had that the direct tax reform has done, in which the total tax was reduced below. If you have a tax above 12 lakh only, we will be taxable for a salary person. So one of the thing, and after that, we had the GST restructuring. Other than this, if you go to the corporate tax, also it was reformed, I think 5 years back in 2019-20. It was cut to around 25%. Along with this, there have been so many reforms has been initiated by the government, especially in the last 2-3 years, if we see, including the focus towards manufacturing in India. Coming with new measures like PLI schemes and so forth. So as a result of that is what, if you go from the point of a market, the expectations, that is why I said the expectations were very low. But still, along with that, if you go to the relevance of budget over the last maybe, especially last 10 years or 12 years, we have been seeing that the relationship between budget and the performance of stock market has been reducing. This is because most of the important measures, whichever is happened in India, has been taken out of budget. So, for example, if go by return wise, the return given by Sensex over the last 10 years, pre-budget and post-budget, it is always negative. For example, on a month-on-month basis, if I see 1 month before and 1 month after, the return is around, on an average, -1%. So, the reaction to a budget has to do something if there is some positive or a negative surprises in the budget. So, nutshell, what I am trying to say is that this time the expectations are far more lower, because especially last 2 years we have taken so much of reforms. So, the nutshell, what the market was thinking was about maybe it will be just as an event which will go by, a day in which we'll be able to see the financial position of the nation, and with minimum changes in taxation, especially taxation. But still, there were some minimum expectation always has to be there, and in this case, for example, one was that there should be not any further increase in taxation. Of course, one setback came with the STT FNO, which give an impact on a day, on Sunday, and then after that we have been seeing that the market has improved. So of course it is maybe a short-term reaction, should not have a long-term negative bias from the point of a stock point, because it will not impact the in terms of value. If you are trying to value a company or a stock price, it will have a negative impact on the intrinsic value of a company. So like that it will not have an impact, but yes, from the trading point of view it has some reaction. The other thing, as I said, there are some small expectations, minimum expectation, one of which was the way the incentive has been given to the equity. A similar expectation should, incentive should also be given to the bond market. That was a high expectation. This has been running as an expectation in the market for a long time, especially last 4-5 years, because till now the bond market, we are still taxed at, as per the slab, more than 30%. Whereas for equity, it comes to 12.5% in the capital gain and around 20% in the short-term basis. So one was there should not be any change in taxation. Second thing was some incentive to the bond, to invest in the bond market, or fixed assets, and to do further increase in expenditure, capital expenditure. Along with this, sector-wise also expectations were there that the government should provide a support, especially to those sectors which has been impacted because of high tariff, which we have seen this year, because tariff were announced by US. So this was the minimum, I would say minimum expectations it was expected. Along with this, I think an indication was also given about consolidation of the PSU banks. That also some expectations were there that some norms will be announced that will give like some in which we can bring that when they are going to do the consolidation of the PSU banks. Of course, that didn't come. Maybe that could be one of the reasons why the PSU banks have been underperforming lately after the budget. So if I go, what I'm trying to say is basically the expectations were very low this time, especially low compared to especially last 2-3 years. It was still below than that. Let us see which were the key actions taken in the budget. In this, let me focus on maybe 4-5 points. One is that the budget is based on a nominal GDP growth of around 10%. This is a very important from the point of because based on this only we will come to know what is the total income generated by the government and how it will be allocated, how it will be allocating it expenditure. This we are saying because, for example, last year also the government has forecasted around 10 or 10 plus 10.5% type of a nominal growth, whereas the actual was very less than that, 8%. A negative impact of that we have seen this year when the total revenue growth is forecast to be on the much lower side. Of course, it is because of the reforms undertaken, but that has directly given an impact on the profitabilities generated by the companies also. In this, one of the important reason is inflation. For example, now if you go inflation, it is around, if you go by CPI, it is around 1%. If you go from the point of a corporate, which is the wholesale price index, actually it is negative till now. And inflation plays a very important role for growth, especially for a developing nation like India. This could be one of the reasons why there has been a huge downgrade in earnings in this year. When there is a downgrade in earnings, this have a direct impact on the performance of stock prices and the intrinsic value of a stock. So this time also, if we see, even though the government presumes that the India will continue to grow at around 10%, which it has been doing historically. If you historically, yes, India has been easily able to do around 10 to 11%, 9 to 11% type of a nominal growth, but which we have not seen a similar growth this year, and there is a risk that it may continue this year also. Why I am saying this? Because as I said, the current inflation is much below, around 1%, and the RBI is expecting that it will move towards 3.5%, maybe 4% by the end of the year, but it is a bit difficult to forecast now, because if you go by what is happening in the world, the whole world itself is slowing down. So it is still a challenging period to believe that India will be able to grow at 10% this year continues to be a challenge. So maybe that is why one of the reason, as an analyst, when we look at a stocks to stock, company to company basis, if we go at the growth, at least in the near term, we are not able to see a big growth in revenue and profitability. So if you go by this, if you go by the forecast, the government is talking about around 6% growth in tax collection, which is again on the lower side. If you go by the history, easily they have been forecasting around 10 to 12%. But because of the reforms, as we indicated especially in the last 2 years, they are talking about 6% only. Because of this, they have to. The dependence on bond is increasing on the higher side. So they are going to borrow more. In a sense, so even though the revenue growth is around 6% they are talking about, but they are forecasting around 10 to 11% growth in the capex. To maintain that capex of around 10 to 10.5%, they will have to depend on borrowing in the future. This could be one of the reasons why we are seeing the bond yield increasing lately. For example, after the budget, we have seen around 20 bips increase in bond yield. Of course, it has come down a little bit in the last 1-2 days, but if this is the end plan of the government, of course, it may continue to have a some bias towards increasing the bond in the future. A negative bias of that is already visible in the banks, especially in the PSU banks. Of course, there were some expectations that they will come to do something they will talk about how they will do consolidation. That was one of the reasons the PSU banks has been doing so well, especially in the last 12 months. But higher bonding, borrowing by the government may not be taken well especially from the banks, and if you go by the finance sector, I think especially for the PSUs, because they will have to invest more towards the bond. So this is one of the risks we presume in this budget. Fiscal 4.3%, the forecast, I think this is in line with the expectations. It is the minimum, I think it was expected, and they have done mostly in line with that. But of course, their long-term plan is to take it towards below 4%. Maybe it will be, yes, if they are able to do that, maybe over the next 4 to 5 years, it will be taken very positive by the market, especially from the international credit nations firms. Today, I think India's rating is triple B. If they are able to reach towards 3, I mean, there is an expectation that if they are able to reach below 4%, maybe 3.9%, no, the rating of India can improve towards plus triple B. Other than this, the important thing, I think, the capex, 3.1%, 3.1 as indicated by doctor, it has increased a lot. If you go by from compared to the last 7 years back, it has increased a lot. But this 3.1% has been flattish, especially in the last 5 years. From 3.2%, it has marginally come down. If you go by where they were able to manage this 3.1% increase in capex, if you go by last year, I think similarly, they were talking about, I think, similar 10 to 12% type of a growth in capex, but they were not able to match that. Actual performance, I think, is around less than 5.5% is what the number. So they have not been able to do the enough amount of capex expenditure they have spoken last year. This is one of the reasons why the infrastructure companies in India has been performing very bad, very weakly this year. They have been among the weakest performing. Of course, for a long term, from an investment point of view, it may be a good opportunity because of the low spending done by government in the last one, especially in the last 1 year. The infrastructure stocks are available at very cheap valuation and attractive valuations. I think on a 1 year forward basis, if we consider P as a term of valuation, they are available at around 10 to 12 P, which is very, very attractive. So yes, it is an opportunity, but here again the question is coming whether the government will be able to match with the minimum amount of revenue growth they have spoken about, and whether they will be able to borrow in the same amount. The pressure on borrowing more has increased for the government, and because without that they will not be able to again spend enough capex. They will not be able to spend enough. So again, so these are some of the questions in the budget. If you go by the sectors on which they have focused a lot, of course they have tried to give support to new sectors. In which I mean the highest focus they have given on data center. I think this is a very great important call they have taken. Why we are saying this? Because India generates around 20% of the growth in, they consume around 20% of the world data, but in terms of the capacity, what we have is less than 3%. So the action, the measure they have taken is very, very well. It will be taken very, very well, especially by the foreign players. And they have given completely, holiday in tax for next 20-25 years. If they're able to do it, it will give more opportunities for India. And of course, because of this, though there are no such players doing this type of a business in India, but of course they will be able to do this, bring such type of sectors by setting up JVs, which has already started. The large players like Reliance and Adani's, they are already Tata Group, they have already doing it. But yes, it will take maybe 2 to 3 years to see a real benefit. If you want to invest in such type of opportunities today, the opportunities will be limited. But yes, there are few, maybe around 10 to 15 stocks, companies which are doing it. Though this only thing is that this benefit is now provided to the foreign players. Maybe the Indian players are all, I mean, the voice is already coming up. They are starting for the same type of benefit for them, so that they will be able to do a stronger, maybe a higher amount of investment in this sector, along, of course, with taking from some JVs with the international players. So data center is an upcoming area, and along with this is the manufacturing of semiconductor, which was already started. It is the next phase of mission 2 is what they have started. They are giving a further focus towards that. Along with this, they have brought a new sector, which is biopharma. Of course, pharmaceutical, we are very strong in it, and we have been doing well, but not the biosimilar technology is not grown well in India. If we compare India to what China has been achieved in the biosimilar, or especially in the last 5 to 6 years, we are much below. So they are trying to give an additional support to biopharma. Of course, this will provide new opportunities for the pharma sectors in India. And of course, as indicated by Dr. Rare Earth, of course, it will be positive for Kerala also. Along with this, manufacturing, the reform has been happening, especially in the last 3 years, and for this further allocation they have given. All this is going to help the GCC sector. If you look at this, if you want to play on this in this type of area, I think for today, as I said, though the direct companies are so low, or you have to take a call on a group to group basis, like Reliance, Tata, and Adani's, we can take a call on that. But a huge indirect benefit for this is likely to come from the IT sector, real estate, and power, which is already there in India, and a very strong sector. They are very high, strong sectors. So this sectors is likely to benefit hugely from this over the next. We'll be able to see a huge benefit of this maybe in the next 3 to 5 years. Along with this, along with the new sectors, I think they have tried to provide the traditional sectors also. As indicated, that there was expectations that they should at least provide some support to the areas which were negatively impacted because of the tariff. They have tried, the government has tried to do that. They have increased higher allocations towards textile, leather, aquaculture, and SMEs. It was taken well. We have already seen a positive effect on this in the stock market. This sector's stocks has been doing well, and of course it is supported at the same time. Luckily, India was able to make a deal with US. So, and because of this tariff, what was happening? Because of this 50% tariff, the most negatively impacted were this textile, gems, aquaculture, and leather. At the same time, it is what is happening is as the sentiment towards these sectors has improved a lot. Hence, these sectors are doing well. For the SMEs, I think they are trying to give more funding, along with providing more liquidity and support from the banking sector. Along with it, some of the other positive things from the point of budget for the stock market has been the reduction in tax for buyback. Before this, buyback was considered as was tax that you based on your slab. Higher the slab, higher will be the tax for you. Now it has been considered as a capital gain, so 12.5%. So it was taken. Sorry. This buyback was taken well. Reduction in tax for the buyback was taken well by the market. This will be especially positive for some of the companies which have a strong balance sheet. When we go on those basis, the sectors like IT and FMCGs and consumptions, these are the companies which have a very strong balance sheet, which have been doing buyback consistently. They have been doing buyback in the last 5 to 6 years. So this type of sectors will be able to benefit from this. STT, as we discussed, as we spoke about that, STT has a negative bias in the short term only, but we don't think that it will be having a long-term negative bias to the stock market. Other than this, a reform was towards the PFC and REC for the suggestion was given. Of course, the details is expected, but it is taken well by the market. Both the stocks are doing well. In terms of investment, what is our strategy? Let me try to say what was our expectations, what was our view towards the investment strategy in last year, 2025. So last year, since we had a bit cautious view on the market, we had suggested around 60% investment in the equity, whereas 40% for the non-equity. This was mostly because we had a bit a cautious view on the market. That was because of high valuation and the selling pressure from FIIs. This was mostly because of the slowdown in the economy, along with some downgrade in earnings. Because of this, the valuation of India, which has been trading at a premium valuation since 2018, 19, 20, India has been trading at a very premium valuation, and it was still sustaining. It was sustaining that for over, I think, 5 years. There is a so what is happening is there is a minimum amount of correction. There was a minimum amount of correction in the market. So valuation continues to be on the higher side. So we had a cautious view on the market in 2025. We had given only 60% for the equity and 40% for the non-equity. But this view has changed in 26. What we have increasing our weightage from 60% in equity to 85%. We have a positive view on the stock market and the performance of the Indian stock market this year compared to last year. So we have reduced the weightage for others, in which we have suggested in 2025, we have suggested 10% for gold. Now we are cutting it to 5%. We have suggested 5% weightage. I am talking from the point of a portfolio. 5% for cash, which we are cutting to 0 now. In this 85% on equity, we are suggesting 60% for large cap, 15% for mid cap, and 10% for small cap. Mid and small cap, our view has improved compared to last year, but yes, the mid and small cap in India continues to trade. For example, if you go by mid cap, they continues to trade at around 35 to 40% premium to the large caps. If you go by the history of last 10 years, mid cap continues to trade at a premium, but that premium is around between 20 to 25%. So despite of this downfall in the economy, especially to do with the moderation in the earnings growth, this 35 to 40% of premium valuation is still on a higher risk for the mid and small caps. So hence, for the mid and small caps, we have to be a bit stock specific. Hence, that is why, though we have increased our position towards mid and small cap, we are reducing. It is still on a mostly towards the large cap only at 60%, and overall for the mid and small cap only overall 25%. So based on this, assuming that the reforms which has happened in the last 1 to 2 years, we expect that the earnings growth in corporate to improve, especially from the second half of this year. If you go last year there was a huge downgrade in earnings. So we expect this to improve from this year second half. Hence, overall we have a positive view on the stock market. For Nifty 50, we have a target of 29,150 for Nifty 50 compared to around 25. Currently, I think it is 25,000. which presumes to around 13% return. If there is an upside in the, if the reforms which has been happened and if it leads to an extra growth, because since the US deal has happened, there is a possibility that there is an upside risk to further growth in earnings. If that is happening, of course, the valuations for India can improve further. If in the best case, I think we expect that Nifty 50 can reach up to 30,000 to 31,000. This is a broad view from the point of investment. Other stories, overall, from the point of the budget, as we indicated, all that these are the new areas of growth, including basically to do with the manufacturing, biopharma, and data center. Along with this, some of these areas which can do well is infrastructure, as I said, because the valuation is very low, and the consumption story also, because of the reforms happened in the last 2 years, the personal income of common man is increasing in India, because hence this can lead to higher growth for the consumption story. So these are broadly the view from our point of view. Thank you so much.
Thank you, Mr. Vinod. May I invite Ms. Kasia to kindly share her thoughts.